This video is about technical analysis strategy focusing on chart patterns. In this video, I will discuss different types of chart patterns and how to use them in order to make informed trading decisions. I will be dividing these patterns into two categories, reversal and continuation. Watch this video until the end because just before the end of it, I have a critical point and tip for you. But if you haven't watched my previous videos because they are related to this one and they are necessary to be watched before you watch this one, so this video is not for you. Please go check them out first. I'm gonna leave the link in the description below, and afterwards come and check this video so you know what I'm talking about exactly. But before getting into anything, talking about the patterns, we need to get to know some definitions. First is support and resistance areas. What is a support and resistance area? We're going to talk a lot later on, but for now, we only need to know there are some places which the price has some reactions to them. I talked about this previously. Not briefly, it was just a glimpse. If you haven't checked that video, I'm going to leave a link down in the description. But again, I'm going to just point out to it really quickly. So when you see the price, for example, goes up and then at a level, it rejects and goes back down, or vice versa, the price goes down and it reaches a point and then from there it changes its direction and goes the other way, of course upwards, or goes sideways. We call these points, these areas, support and resistance areas, which can be static, which are just horizontal lines, or they could be dynamic, which are they can be in angles. The other definition which I want to talk about is higher highs and higher lows. So when the price is in a trend and it goes up as an uptrend in a, let's say, a bullish market, we have higher highs. So the price goes up and down, so it makes higher highs, which we know them as double H, and higher lows, and we know them as HL, and then vice versa for a downtrend or a bearish market. So we use these a lot in the upcoming sessions. I just wanted to point out them really quickly, but we're going to go for more details in the upcoming sessions. Alrighty, let's start with reversal patterns. The very first and well-known one is head and shoulders. The head and shoulders pattern is a popular reversal pattern that indicates a potential trend reversal from bullish to bearish. The pattern is formed when a stock, crypto asset, or security price rises to a peak and then drops, followed by a higher peak and another drop, creating a shape that looks like a head and two shoulders. These patterns indicate that the buyers are losing their strength and the sellers are taking control of the market. The same situation is happening for inverted head and shoulders, but everything is in opposite situation. Traders often use the head and shoulders pattern to make sell orders, which signals a potential market downtrend. Is important to wait for confirmation of the pattern, such as a breakdown of the neckline, before making a trade. Here's an example how it gets done. Okay, here's a really good example of a head and shoulders pattern. If you take a look at it, it is not always that classy as you see them in the books, or you can find some pictures on Google. But after some time you watching the market for yourself, you can realize them as soon as you see them. So if we just take a look at here, you can see it. There is a head and shoulders happening here. So let me just for a moment remove candlesticks and you can see it is exactly like our head and shoulders with a beautiful neckline here. Right, change the color. Even though if you are not familiar and of course your eyes are not friendly with the chart patterns, I recommend you to, if you want to find them quickly, you can change your chart mode from candles to lines. So switch to a line chart. Now you can see it is more obvious and it is more like a head and shoulders. So how we just take a trade with it and how can we understand how it works, I'm talking about that right about now. It happens, the first thing that we want to know that if it is head and shoulders or not, because sometimes you see a patterns, it is almost like it, but it's not. First, there must be a sharp movement of the price going up. It goes down and again up and down. And if it is not a sharp price movement, it is not a head and shoulders. You cannot call that a head and shoulders. If the price coming from a range market and then something like head and shoulders happen, it is not a head and shoulders. So in this case, we have a sharp price movement going up. So I'm going to mark it like this. Then it goes down. Again, it goes up and down and goes up again and it goes down. So in this case, let me change the color here. What should we do? It is really simple how it gets done. We can just set a neckline like this and then we wait for the price to break the neckline to the bottom, going more down like this in here. So what should we do? How much the price will go down? If we can just determine the distance from the peak of the head to the neckline and then put it on the neckline, we can see that the price will at least, I repeat, at least goes down this amount. So if I want to take a trade, let's say if we take a trade here, set our stop loss here. If you don't know what is a stop loss, what is long, what is short, you have to watch my previous videos. I told you there is a link in the description. Don't miss it. So I don't want to waste any more time talking about them again. If I put it here, the price will touch this target point here. So let me switch to candlesticks again. And you can see that the price easily as a piece of cake touched our target point and not even touched our target point. It went further down. As I told you, at least the price goes down as much as the distance from the top of the head to the neckline, it will go down. So I switched back to line chart to determine an inverted head and shoulder for a long position this time. So I've encountered one here. I told you it is not as beautiful as it is in the books, but after a while you get used to if it is a pattern or not. You can see the price movement was a sharp movement to the downside. And it was a bearish market. Then it went up, came down, went up, came down, and it continued. So it is an inverted head and shoulders. Let me make the lines disappear so you can see, yes, it is. If I put a neckline here, just like the head and shoulders, this is the opposite side for long positions. So how much the price will go up? Again, we determine the bottom of our head and shoulders, which is the head, to the neckline, and then the price will go after the breakout, the neckline, the price will go at least to this point. So let me set this point as our target point. If we take a trade here and set our stop loss here and set our target point here, let's remove everything and see if the price hit our target and switch to candlestick chart. And as you can see, yes, it reached our target point. And it was a 0.98%. If we use the leverage like 10x, it was like 9.8, almost 10% of profit, which is crazy good. How do we do these? And how to set a stop loss, where to put it, what is the best target point? We're going to talk about this later on a lot, but we just want to know how the chart patterns work. I need you to go to your own chart, bring your chart up, and try to determine and find as much as you can in different time frames. If you don't know how to switch in between time frames and how to do them, I leave a link above here. I talked about it previously. Watch that video to know how to work with TradingView, how to switch in between timelines, how to use these tools here. The next chart pattern which I want to talk about is the double top. The double top pattern is another reversal pattern that indicates a strong resistance level. As the name suggests, this pattern is formed when a stock, crypto asset, or security price rises to a certain level, drops, and then rises again to the same level, only to drop again. This pattern indicates that the buyers are struggling to push the price higher, and the sellers are gaining control of the market. Traders often use the double top pattern to make sell orders, or let's say short orders, as it signals a potential market downtrend. Important to wait for confirmation of the pattern, such as a breakout of the neckline before making a trade. Before making some examples, I want to tell you about the double bottom, which is the opposite of double top. The double bottom pattern is a reversal pattern that indicates a strong support level. This pattern is formed when the price of a stock drops to a certain level, rises, and then drops again to the same level, only to rise again. This pattern indicates that the sellers are struggling to push the price lower and the buyers are gaining control of the market. Traders often use the double bottom patterns to make buy orders as it signals a potential uptrend in the market. It is important to wait for confirmation of the pattern, such as a breakout of the neckline, before making a trade. So exactly like the head and shoulders, because you're new to TradingView and your eyes are not used to see those candlesticks, you can switch the chart to line chart. Then you can see how easy it is to determine different chart patterns. In this case, I have found an example of a double top for you. Exactly like head and shoulders and inverted head and shoulders, there must be a sharp movement to the upside, and then the price goes down and then goes up again and goes down. So we set a neckline here. The price must break the neckline, and then how much the price will go down, we choose the left shoulder, or let's say left top. And because why left top? Because sometimes they are not in the same level. But it is not really that important. We just determine the distance from top to the neckline, and then we put it here on the neckline, and the price at least goes this amount down. So let's take a short position here and see if the price goes that way and hits our target. Yes, it has, but let me switch to candlesticks chart. As you can see, the price easily touches our target point. In the case of a double bottom, I don't switch to line chart because I want you to do the same. After time working with line chart, you have to switch to candle chart because it's a lot better to see the price movements. So there was a sharp movement to the downside, and then the price went up, then go down again, and it wants to go up. So we put a neckline here and wait for the price to go above it. And then we take a long position here. And how much the price will go up? Okay, left bottom. And we determine the distance from the bottom to the neckline. And let's make it straight like this. Then put it here, and the price at least goes this amount high. And it went a lot higher, but it was our target point and it reached it. So I need you to go to your own chart and find the examples like this and practice. And if you have any questions, feel free, don't be shy, ask me in the comment sections. Another reversal pattern which I want to tell you is cup and handle. The cup and handle pattern is a more complex reversal pattern that indicates a potential trend reversal from bearish to bullish, and of course vice versa for inverted cup and handle. This pattern is formed when a stock, crypto asset, or security price rises to a certain level, drops, and then rises again to the same level, forming a cup shape. After this, the price drops again, only to rise slightly to form a handle shape. And of course, everything is opposite for inverted cup and handle. Traders often use the cup and handle pattern to make buy orders, or let's say long orders. As it signals a potential uptrend in the market, it is important to wait for confirmation of the pattern, such as a breakout of the resistance level before making a trade. Now let's go to the chart and make some examples. As I told you, it's a more complex pattern, so I changed the chart to line chart so you can see it in a better way. If you put a line here, you can see how this cup and handle works. This is our cup and this is the handle. You see, it's the cup and it's the handle. How much the price will go up? It's really easy. We can just determine from the bottom, the very bottom of the cup to the neckline, like this. And then the price after breaking the neckline goes up at least this amount. So if we took a long trade here, so our stop loss here, and you can see it easily, just piece of cake, the price hits our target just like that. Let's make an example for inverted cup and handle. Okay, here's an example of inverted cup and handle. I really don't expect you go find them easily because especially cup and handle and inverted cup and handles are really rare patterns to happen, especially when you're looking for them in higher time frames because the frequency is really low. I might say it took for me for like a couple of minutes to find. So in this case, you can see this is our inverted cup and this is the handle. If we set the neckline here, how much the price will go down? We said it's really easy to determine. We just set this distance from the top to the neckline, then we wait for the breakout, it goes down this much. So did it hit our target? Yes, of course it did. So it's like this. If we took a short position here, our target was here. So again, go and find them for yourself and try to practice as much as you can and just ask me any questions which pops up into your mind. Now that we've covered the most important reversal patterns, it's time to talk about continuation patterns. The first one is triangle, ascending and descending. The triangle pattern is a popular continuation pattern that indicates a potential trend continuation. This pattern is formed when the price of a stock creates a shape that looks like a triangle, with either an upward or downward trend. The ascending triangle pattern is formed when the price makes higher lows and forms a flat resistance level. The descending triangle pattern is formed when the price is making lower highs and forms a flat support level. Both patterns indicate that the buyers and sellers are in a state of equilibrium and the market is likely to continue its current trend. Traders often use the triangle pattern to make buy or sell orders, depending on the direction of the trend. It is important before making a trade to wait for confirmation of the pattern, such as a breakout of the resistance or support level. Let's take a look at some examples on the chart. Here's an ascending triangle. Where is it? Let's draw it first. We have this resistance area. It means that the price is resisting to past this point, which we're going to talk a lot about this later on. And then we have a support area. We call it a dynamic support. We have two types of support and resistance areas. We're going to talk about this later on. Don't worry. But this is a dynamic support. So the price is supported by this area. If I continue this, so you can see it's a triangle. And then the price breaks it. And how much the price will go up? In this case, price will go at least the amount of this point to this point. It will go up from here, and you can see the price went a lot above that. No one knows how much a price will go up, and because this is an unpredictable market. But if we took a trade, we took our profit and we came out of the trade for ourselves. So if we took this trade, how much was it? It was a long trade like this here, and our stop loss was here, and our target point was here. And it was a pretty good amount of profit. So forget about the risk movement of the market. So it was our share of the market. And we're going to talk later on about the psychology of the market and risk management, money management. And we're going to learn that not all the profits in the market is for us. We just want to take our share and come out. So in this case, it was really good profit. So here's an example for a descending triangle. So this is the bottom of our triangle. And so this is the support level and the resistance level here. You can see as soon as the price breaks it, how much it will go down. We said we determined this distance here. We put it here. And did it hit our target? Yes, it did. If we took a trade here, set our stop loss here, the flag and pennant patterns, which are really close to each other, and I call them the same myself. I do not believe that there are so much of a difference in between them. It is just something that with different names, but they are more or less the same. There are also continuation patterns that indicate a potential trend continuation. These patterns are formed when a stock, crypto asset, or security price rises or falls rapidly, and then forms a small flag or pennant shape before continuing its trend. The flag pattern is formed when the price makes a sharp move up or down, followed by a consolidation period where the price moves in a parallel channel. This pattern indicates that the buyers or sellers are taking a break, and the market is likely to continue in the same direction after the consolidation period. The pennant pattern is similar to the flag pattern, but has the more triangular shape, indicating a stronger trend continuation signal. The pennant pattern is formed when the price makes a sharp move up or down, followed by a consolidation period where the price forms a triangle shape before continuing its trend. Traders often use the flag and pennant patterns to make buy or sell orders, depending on the direction of the trend. Before making a trade, it is important to wait for a confirmation of the pattern, such as a breakout of the resistance or support level. Now, let's take a look at some examples on the chart. Okay, here's with a really good example of flag pattern. So as you can see, there is a support level here, a dynamic support level here, and there is a dynamic resistance level here. Let's make it more chic like this. So as soon as the price breaks above it, and you see there was a sharp movement from here. So how much the price will go up? It's really easy. We have to first find that the price moved to the upside from here to the top of the channel, this flag, and then put it to the bottom of the flag, and then see the price will goes up. So we wait for the breakout like this here, and we set our stop loss on the last low here. Did it hit our target? So our target was here. Yes, it did. You can say it's here. Here's with another example. This time for a continuation to the downside. So we had a sharp movement to the downside here, and then we had a stop of the price with the support and resistance like this. How much the price will go down, we determined first when the price started to come down. So it was here to here, and then we put it here, and it hit our target. And the pennants work just like the flags. You can just go find for yourself. If you have any questions, again, just ask me. I would be really happy to answer your questions. Now it's time to pay my dues and talk about the golden tip, which I told you in the beginning of the video. You are not allowed to use only these patterns to make trading decisions. We only can use these. Of course, it depends on our trading strategy in the future, but we can use these patterns in order to take some confirmation, let's say, make more sure of our trading and make a better trading decisions. But if you want to trade only with these patterns, believe me, it's not going to work out. So how we can do that? we have to combine it with our main strategy, which I will talk about in the upcoming videos. But as for now, you need to know these patterns because in the future, we have a lot to talk about them. I hope you like this video too. If you really do, please like the video, hit the subscribe button if you haven't yet, and share my video with your friends so they can take the benefit out of this free course for themselves too. If you have any questions or you want me to talk about different things or focus on a specific thing, please just tell me in the comments below. I would be really happy to answer your questions one by one. That's my pleasure. Thank you. See you in the next one.